Hi guys! In this episode of my vlog, I'm going to share several lessons that I've learned after investing in Bursa Malaysia for the past 1 year. And I'm also going to share my Moomoo portfolio composition at the end of the video. So if you're interested in that, then keep on watching. Alright guys, so the first lesson that I've learned is that it's actually not that difficult to invest in Bursa Malaysia. And you don't have to have a large capital to start your investing journey. You could start as low as 100 ringgit, but I feel if you want to have a nice diversified portfolio, then at least you need to have 10,000 ringgit as your starting capital. So for myself, I have stick to the basic of buying and selling shares and ETF, and I have not tried the other fancy options such as warrant and options, and honestly, I don't feel like I'm missing anything. So yeah, I wish I've started my investing journey sooner. Lesson number 2 that I've learned is that with the advance of technology, it was easy to set up my brokerage account, and you could even do it using your mobile phone from the comfort of your home. The two easiest platform to register would be Moomoo and Rakuten, and they also charge low brokerage fees. So I would recommend them, and I'll leave my referral links in the description box down below. The third lesson that I've learned is that it's better to have a platform with a reference point. So for example, you could have a look at the company's account, their shares target price, and the support and the resistance level of their share price. Lesson number 4 would be the difference between trading and investing, where trading would normally take a shorter time frame for you to get profit compared to investing, but in the end, you still have to do your buying and selling to make your profit. So personally for me, I'm not good at trading, so investing for a longer term like for a year would be the better choice for me. After a year, then it will be clear to me whether I need to cut my loss or to keep holding to the shares that I have. It is also great if you could identify right from the beginning which shares you want to buy and hold and which shares that you want to buy and sell. Lesson number 5 that I've learned is to allocate a certain number of percentage of my portfolio to a certain asset class or a certain type of shares that I can rebalance according to the market situation. And lastly, I think this is just my personal take. I think it's also important to take out the profit that I've made and transfer it to a lower risk medium or to a higher yield account after the amount of my brokerage account has exceeded my original invested capital. Doing so make me less worried about market correction or a market crash or even a recession. Alright guys, so here's how I'm setting up my Moomoo portfolio after a year of investing in Bursa. So during a bullish market, my percentage of allocation will be to 50% of shares that I want to buy and hold, and 25% to shares that I want to buy and sell, and about 10% to money market fund, 10% to cash, and 5% to either gold ETF, bond, or sukuk. And during a bearish market condition, the percentage would remain the same. It's just that the allocation for the shares that I want to buy and sell will be reduced to 15%, and I would increase to 15% the amount that I would allocate to either gold ETF, bond, or sukuk. So actually, I don't mind to hold all my shares, but to make profit, you do have to buy and sell. So in the end, I think I need to learn to buy and sell to make profit. Anyway, for the shares that I want to buy and hold, I want to say that they are dividend shares, but it doesn't necessarily have to be. Or I could describe them as having fair value, or could be stable, or that it's growing slowly. But I couldn't really describe them except that I want to hold them for the longer term compared to the shares that I have here. So the first shares is MBSB, and that make up about 20% of my portfolio, followed by BIMB, MAYBANK, TAKAFUL, and AL-AQAR REITs. So they are now making up about 48% of my portfolio. And the other shares that I want to have in this list would be MAXIS, Bursa Malaysia, TENAGA, EQ8 My25 ETF, KPJ, 99 Smart, QL, PADINI, Celcom DG Berhad, TM, Pavilion REIT, and KLCCREIT. And for the shares that I would like to buy and sell, I could describe them as growth stock or undervalue, or perhaps they are a bit more volatile compared to the shares in this list. And the first component of the shares in this category that I have now is MSM. I have about 25%, SSF at 4.95%, XOX, FGV, Hapseng, and Paksen. And currently they make up about 35% of my portfolio, which is about 10% more than my allocation. So somehow I would need to rebalance this in the future. The other shares that I would like to have in this list would be Watai, Senheng, Post Malaysia, Berjaya Food, Cheetah, Tage Plantation, My News, Mr. DIY, FFB, AsiaX, Capital A, Hong Kong, Kane, and Aeon. And for the next 10% allocation of my portfolio would be for money market fund, which currently I have about 10%. So the percentage sit about right at the moment. And for cash, it should be 10%, but currently I just have about 6.2%. And for the bond and sukuk, I don't have it at the moment. So somehow I would have to rebalance this. And because I would like to remain Shara compliant, I think bond is out of the question. And there's no sukuk available, so I might have to go with gold ETF. And similarly for the shares, I would like to remain Shara compliant, but I have added MAYBANK to my list because I feel like my portfolio is weak from the point of stocks that can give me dividend. So I've added MAYBANK even though it's not Shara compliant, because the Fatwa Council here had ruled that it's permissible to get MAYBANK shares. Alright guys, that's all for this episode of my vlog. Don't forget to like, to comment, and to subscribe, and I'll see you guys in my next video.